All right, everybody. Stocks by the numbers. Welcome back. Earnings update here for everyone's favorite meme stock, GameStop Corporation, ticker symbol GME, listed here on the New York Stock Exchange. Stock closed 23.45 on the day, down 80 cents, about 3.33% going into these earnings. I know some people thought they were going to surprise. Other people expected the numbers and the earnings to continue to drop down. And we have a little bit of a mixed message here, but overall, it does seem pretty negative. Stock's down to sub 21 right now, after hours, down about 2.5 points, about 11% here, starting to climb up a little bit, even though we just had a bunch of red candles. So we may just see a bounce here, maybe back to the 20-day and then reject and come back down. Expecting this bottom fib right here on the daily right now, 2028. And basically, what happened was what I was personally speculating. I think maybe a couple of quarters back. I don't remember exactly when I may have said this, but they talked about cutting costs and doing restructuring and everything like that, but there really wasn't a plan or strategy in place to actually improve the business overall, right? Because one of the main things that a lot of investors are looking at is the consistent downward trend of the actual revenue coming into the business. So even if they close down a couple of locations that aren't doing well, what we're seeing here is the overall view of the business is shrinking. And as you see here, looking at the EPS side, I mentioned that in my opinion, they're going to cut costs. They're going to potentially surprise and beat on the EPS numbers over the next couple of quarters, even though the revenue is more than likely going to keep dropping, and they're going to potentially keep missing those estimates. And they're going to kind of try to gloss over the fact that the company, in my opinion, is basically going out of business. And they're going to try to, again, increase the profitability and try to have that kind of make it seem like the whole situation isn't as bad as it really is, because hey, at least we're beating on the EPS here. So you can see we had estimates here of a loss of about 8.5 cents a share. The company ends up posting 1 cent a share. So they did cut costs and they beat on the EPS side, as I personally expected. Now you can see the revenue here missing by about 100 million, or almost 11% off of the analyst expectations here. Analysts were expecting 895.67 million. The company reports less than 800 million, missing by almost 100 million. So again, technically, revenue is down big, not only quarter over quarter, but year over year. We closed today with a market cap of just about 10 billion, PE of about 300, and we can see EPS has been hit and miss. And now they beat on the EPS, but again, you can see the trend here. You can see the trend happening in real time. You have that big Q4 bump with all those holiday sales, and you have just consistent declines here. And if we look annually as well, again, you had the declines coming into 2020, and then we popped up after, a lot of kids put their stimulus money into GameStop. They made a couple of bucks, so they went to GameStop, in my opinion, to go support GameStop for making them some money. So the revenue jumps up to 6 billion, but then you can see year over year, and then we're back down to sub 6 billion. Now we're down to 527 billion, which is almost as low as we were when we got locked down. So this is why overall, even though they're getting these margins and the profitability back up, the business itself is shrinking. And that's why I said, in my opinion, I was speculating, of course, because we don't know what the company's going to do. They supposedly brought in this trader who's going to now trade their money. I don't know. So the guy's going to be over there playing like NVIDIA calls, and from quarter to quarter, earnings might change. I have no idea what's going on. But all I do know is that every time you all get it trending again and then it spikes up, what do these companies do? Well, they do what they do best, which is offer more shares, issue new stock, which of course in turn drops the value of the stock and essentially dilutes the whole situation. But hey, as long as they're bringing in hundreds of millions of dollars for themselves, then it really doesn't matter. But basically what's going on is we have a prospectus supplement here coming out today, September 10th. And it doesn't say that we're going to be issuing 20 million shares. However, it mentions the previous offerings, May 17th, June 7th, right, 3.1 billion. Under this prospectus supplement and the accompanying prospectus, and in accordance with the terms of the sales agreement, we may offer and sell up to an additional 20 million shares of our common stock from and after the date hereof. So right now, if we keep the stock here 2021, I mean, if they happen to issue new shares over the next couple of days, then you're going to be looking at, like 400 million in change. And they finished the quarter here with about 4.2 billion in cash. So that would bring them up to about 4.6 billion cash on hand. And a lot of people are speculating what they're going to be doing with these funds. I know people were saying maybe some mergers and acquisitions, but I know that's what they were kind of saying as well. But yet we really haven't heard any news. And I still say, in my opinion, if I was looking to save this business, you're a video game retailer, right? You already have that setup in that sector. So, in my opinion, what you really need to do here is potentially acquire a smaller video game developer and consider coming out with a few of your own exclusive titles. Because again, if they're exclusive to GameStop, now you have something proprietary, and now customers who want that game have to go to a GameStop location to get it, and they have to pay you directly for it. So in my opinion, it seems like that would be the best fix for this situation. And I know they branched into like memorabilia and collectibles, and they mentioned like Pokemon cards, which, of course, I mean, who knows? It remains to be seen. But realistically, again, in my opinion, that's not something that's your own. That's not something that's proprietary. That's just like something else you're going to try to kind of throw into your locations and just try to hustle and make a couple of bucks in revenue from. That's not necessarily going to turn around the business. So this is why, again, until further news comes out of what they're planning to do with those couple of billion and what strategy they actually have implemented and what they think they want to have in place, until I hear further news, then in my opinion, this company is going to continue to dwindle away and should technically be out of business. Right here, well, on its way out of business, I will say. But we can see here down at $21 a share. I mean, realistically, the stock should pull back to like 18, 15, but we know that people are going to still step in and still buy these dips because we saw what happened in the past. So people could just continue to accumulate shares, just waiting for the next squeeze, waiting for the next pop. But breaking down some of the numbers here, we can see shares are down. Surprised investors with a quarterly profit, but sales dropped more than 30%. Original meme stock posted sales 798, down from 116 billion in the prior year's quarter. That is a huge drop. And of course, you and I both know, if this wasn't a meme stock and it wasn't GME, if we had, one of the newer growing trending stocks, like we just did a video talking about Dell, Palantir getting added to the S&P 500. Now imagine next quarter, Palantir shows a massive drop in revenue and revenue's down 30% year over year from where it was. I mean, we both know what would happen to the price of the stock. So the fact that GME right now is only down 10, 11% of whatever it is, in my opinion, if you're a shareholder, you should be thanking your lucky stars, because any other stock would be down to like 16 right now. We saw it with other companies like Victoria's Secret. Remember that time we were going into the earnings, and I think I called puts for that quarter, and then the stock happened to drop. I thought it was going to drop. I don't remember the exact numbers, but I just recall, I was looking for like maybe like a drop to like 19 or $20, and the stock like instantly dropped down to like 16 or something. So depending on what the actual numbers are, I just bashed my knee, but depending on what the actual numbers are, usually dictates how much a stock goes up or goes down. And with a massive drop year over year like this and missing estimates by 100 mil, in my opinion, 10, 12% drop here, you should be thankful, because it realistically should be 20, 25% at least, in my opinion. Earned 14.8 million or 4 cents a share in the quarter after a loss of 2.8 or 1 cent a share in the year ago period. So technically, that's a great sign. But again, this is what I speculated was going to happen. They're going to get the losses in check, and they're going to bump up the EPS numbers, and they're going to try to make it seem like it's better than it is, without, with hoping that investors don't pay attention that sales dropped more than 30%. But obviously, again, we were expecting a loss of 9 cents, so it was a very good beat on the EPS side. GameStop ended quarter with cash, $4.2 billion. Again, potential sale of 20 million shares now incoming. And shout out to, who was it? Cowboys88, who mentioned in the Discord that the last share offering was 75 million and they closed it in 2 days. So again, with the prospectus supplement now that brought to your attention here before, which of course again shout out to my group in the Discord who brought it to my attention when I asked for it. Basically, in my opinion, it's probably only a matter of time before they just issue more shares and try to collect more money for themselves, while again seeming like they're not really doing much with it. I'm kind of at a loss for words, but who knows what they're planning. In June, GameStop said it raised $2.14 billion in a stock sale, noting that it may use the proceeds from mergers and acquisitions. The company is not holding a conference call. GameStop shares lifted by, Roaring Kitty. We love our Roaring Kitty. Reports lower revenue but swings to profit. And this is why I just have to laugh sometimes at the wording and the specific terminology that they use from stock to stock. GameStop reports second quarter results showing a steep decline in revenue, but a return to profitability. Hardware, software, and accessories all declined. Net income beat. Selling, general, and administrative expenses shrank to $270.8 million from $322.5 million. In my opinion, that's phenomenal. I mean, you just cut all those expenses by about $50 million, or roughly, what's that, like 1/6-ish, So what was that, like 17%, maybe 18%? Very good, in my opinion. Very good. See, but the difference is when we see stocks really run and appreciate over time, what we see is that they keep expenses either down or in check, like GameStop did, while at the same time growing their business and increasing their footprint, gaining more market share, steadily seeing growths in revenue quarter over quarter, year over year. So we have some positivity, but it's overall negativity. But technically, I'm happy that they cut some cost here. GameStop didn't issue guidance and says it won't hold a conference call. Let's see. Okay, let's just see. Yeah, because they break down some segments here. Sales from hardware and accessories fell to $451.2 million in the second quarter from $597 million last year. So we went from $600 million to $450 million. So sales from hardware and accessory segment down roughly 25% year over year. GameStop software revenue, which includes sales from video games, digital, and personal computer entertainment software, dropped to $207.7 million from almost $400 million, down roughly 50% from $397 million to $207 million. Collectibles. And I know some people, again, I'm not trying to beat anyone up. This isn't like sticking my finger in your face. Aha, it's down. I was right. You were wrong. That's not what all this is about. But I know some people mentioned the collectibles to me and said that they may start to see, slow growth and kind of like a little revenue stream increase start to come in from the collectible segment. And unfortunately, that segment is down as well, as you see. Collectibles revenue declined to $139.4 million from almost $170 million. So roughly $40 million drop off of 170, or also almost 25%. So we're talking about big numbers here from segment to segment, 20, almost 30, 50% in some cases with the as you see here, sales from video game, the software revenue segment, almost $400 million down to $207 million. So this is why, again, the company, they get these runs up in their stocks, and then, of course, they immediately issue shares to collect money for themselves, and now they're like hoarding cash. But it seems like we've been doing this for quite some time now. So I'm waiting for the big catalyst, right? And I'm sure you all are as well. We're waiting for the big announcement. Okay, now this is what we're going to do with a chunk of our money. We expect to see, X% growth in revenue now moving forward over the next 5 years or whatever, right? We need some sort of plan. We need some sort of action. Because all we do now, quarter to quarter, it's like, again, it's like, oh, EPS is a little better, even though revenue is, in the trash. But at the same time, we have a couple of billion in cash on hand. So, anything can happen. Anything could be coming. Yeah, like, again, I appreciate the hype and the story behind it and the fact that anything could be coming. But until something comes, nothing is happening. And again, all I'm seeing is a company that seems to be dwindling away, that is consistently increasing how much cash they have on hand. And I don't know. I'm assuming, now the board is investing those billions into some stocks, and now they sell Pokemon cards. Like, it's not enough. It's not enough, in my opinion. It's not enough to make the U-turn in the overall business and keep GameStop relevant and turn the story around. And I'm sure there are many, many different strategies they can take to actually turn the business around. But I still say, in my opinion, you already sell games. So if you were able to make your own games, that would potentially be the game changer. Unless you're going to come out with your own system. But again, we know that that's going to be more work. So, I don't know. Again, this is just me. That's just my opinion. If it were me, I would implement some sort of proprietary item service that you can only get at GameStop. And right now, it just seems like it's like a place to go for an hour or two, like have that little experience, play a demo, talk to other people about gaming. Maybe you see something, you grab one or two items, like I don't know. It's not necessarily like a cash machine, really, so to speak. Again, if we talk, 10, 20 years ago, we were in a completely different environment in the gaming industry. So if we're going to get to a point now where their bread and butter, which really was like the video game sales, like now if we take that off the table and people are coming in like, here, like occasionally for like a headset or something, and, but they don't have to buy the game from you really. They can buy it online. They can buy it through the console. I mean, you're expecting people to come in to, buy a Pokemon card and a controller or something from you. I don't know. In my opinion, I'm not seeing it. Wedbush Securities said Friday that it had forecast GameStop sales at $900 million for the quarter, which would have reflected a 23% year-over-year plunge. And obviously they came in significantly below that. The company continues to face headwinds such as a mix shift towards digital sales from physical and an ongoing weakness in the hardware segment as streaming services proliferate. There's a, quote, total lack of any strategy to enter new categories with growth potential. This is what I do, baby. This is what I do. And here you have, one of the lead analysts over at Wedbush Securities basically just saying what I just said as well. I couldn't have put it any better myself. That is perfectly said. Total lack of strategy to enter new categories with growth potential. 110%. And it really is a shame, because I remember, again, I looked at the long-term picture, and I'm talking like 4 or 5 years ago, like before the squeeze happened. I remember seeing that it was heavily shorted, and it was in this massive downtrend, and the revenue was dropping. And again, like we mentioned, the change in the gaming scene. Now you can, buy CD keys of games online, and you can just like order it and install it on the console directly. Like you don't have to go out and actually buy the game anymore. And that's why I kind of saw the writing on the wall, like, if GameStop doesn't turn it around, if they don't implement something new, if they don't, try to combat this shift from physical to digital, then they're just, going to slowly keep dwindling away, and they're going to consistently see lower and lower and lower revenue until historically what happens is, they can't afford to keep their doors open, and then they, have to liquidate, or, they file bankruptcy or whatever. And this was, again, 5, 6 years ago. when people were looking at GameStop. And now, in my opinion, you get completely blessed with that massive stock squeeze. You're issuing shares like crazy. You're holding billions in cash, and again, correct me if I'm wrong, but the only news I heard is, they brought in this guy to start trading their cash and Pokemon cards. It's it's not the correct recipe. It is not the correct strategy, in my opinion. And I think it really gets worse before it could possibly get better. I don't know. I don't know. I'm just at a loss for words. But we know that sometimes, earnings come out, and now again, the stock's taking whatever, like a 10% hit. And we know that sometimes, what's today, Tuesday? So we know, like, we might get like some random announcement, like midday Friday or this time next week. You know what I mean? And all of a sudden they're taking 700 million and they're buying this company, or they're taking 1.5 billion and they're investing into this sector now, or something like that, right? So we know that there could potentially be more news coming, but again, we've kind of been saying this for the last several quarters, and I'm not seeing any strategy even being discussed. But again, just looking at the business here, these are big drops, man. These are big drops. They can't afford to go from 600 million to 450 in their best segment, from 400 to 200 in their second best segment, right? These drops, it can't be sustained, right? That's my point. It can't be sustained. And now, you're going to say, yeah, everything's dropping, but we got, we're going to raise 20 million more, issue 20 million more shares, potentially, could be coming soon. So, like we said, that would bring them up to like 4.7 billion. But you can't have a business that is consistently shrinking while just trying to tout at the same time, like, we got 4.5 billion in cash. It doesn't mean anything. And of course, you can make the argument where, if you're sitting there and holding it in cash, well, we see that the dollar is dropping in value. Again, in the country, realistically, the dollar is dropping in value. Not necessarily if you bring up the US dollar index, right? You understand what I'm saying? Just like when they used to say inflation was, like 1.5%, 2%. But realistically, if you went out and you saw year over year, it was, inflation was like 3.5%, 4%. These prices were moving. So we know that kind of quote unquote real world inflation is a little bit higher than, actual inflation that's reported. So again, you're sitting there and you're going to issue 20 million more shares, raise more cash soon, maybe. So now for 6 billion, but it's technically losing value day by day. That's why I didn't even think the cash on hand would get this high. I thought when we originally heard about the offerings that we would hear follow-up news. Right? Oh, we raised whatever they raised, 3.1 billion last time or whatever, and now we're going to do this. Right? There was no second part to the catalyst. It was just, yeah, we're offering more shares. We're allowed to via this document. Right? Which again, I get, but at the same time, what are you actually doing? And now if it's just going to turn into a speculative trader stock, and I'm not talking about you guys as traders, I'm talking about the board as traders, right? Because apparently they're allowing, who is it? What's his name? Ryan Cohen or whatever? They're allowing him now to trade and invest the cash they have on hand. So that's what I mean. So now it's just going to be a video game retailing company that inevitably goes out of business and everyone knows. And now we're investing into a company of a guy who's investing into other companies, right? That's essentially what we're talking about. So imagine I raised whatever, 50 grand, 100 grand, and then I issued shares in myself. That's like the story we're talking about here. And then you would buy shares of me, and if I made money, you would make money, right? Which again, I'm not doubting anyone's abilities. I wish them the best of luck, but now we're no longer a video game like what the heck are we doing here? But yeah, I had a feeling they were going to turn the EPS around and they were going to make it seem like, oh, it's not that bad. Look, we're cutting losses, but those 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 drops in those segments are huge. Again, 25, almost 50%. These are big drops that cannot be sustained. And if you're going to tell me that, oh yeah, occasionally, one quarter a year when it's, Christmas, Hanukkah, oh yeah, that's when we have a great quarter. Yeah, yeah, okay, great. But that also can't be sustainable, right? If there's 4 quarters throughout a year, you can't only do good business one quarter. Talk to any businessman you want or businesswoman in the comments section right now. What business can sustain, shrinking and dwindling for 9 months, but do good business for 3 months? It's not, especially if you're publicly traded. But again, I'm glad, yeah, net income was positive, very good. They're holding a bunch of cash on hand with apparently the ability to now issue more shares, which I have to assume is coming. But right now, stock down 21 and a quarter, down a little over 2 points, 9 1/3%. Let's switch over to stock charts quickly. I'll let you go. And I'm sorry, I know I go on some of these rants sometimes, but again, sometimes when we're talking about an investment, I like to take a step back and look at, the long-term potential of the company, of the business itself. And you might say, oh, that's old school thinking, and I appreciate that. But again, old school thinking goes back to the Buffett method and taking away Nancy Pelosi with her amazing trade sense lately. Take her out of the picture, and, Buffett's number one. So this is why, again, is someone like that always going to be 100% correct? And should you, completely follow their strategy? No, understandable. We know this. But at the same time, if he was one of the most successful to do it, it'd be kind of silly to not listen to some of the advice at least. And that's why I'm looking at GameStop longer term as a business, as opposed to, ooh, what's the stock doing today? Where's it going to be next week? Right? Because we know what a tweet from this guy and the stock will go back to 40. But we also know Thursday, if they issue more shares, then the stock's going to go down, right? So we know it's a day-to-day basis of just whatever the heck pops into their head and someone decides to say. So we don't know what's going to happen, but we do see, it looks like we have big tightening here taking place, look like a big symmetrical triangle right here. And we were expecting either a break up or a breakdown. You can see the tightening of the Bollinger Bands as well. We started to climb actually and get to the top end going into these earnings. And now we're dropping basically back to the bottom Bollinger Band there, 2037. Stock right now, 21.23. We were down to 2040 though. So we basically came down right around this bottom Bollinger Band and now we bounced like 80 cents. But in my opinion, probably going to open down in the low 20s and should technically break the triangle down and come back and retest this 200-day here, 1856. Because again, since May, when we popped up and had that last squeeze, it's been well above this 200-day moving average with not much happening and now bad news coming out. So it really should drop down. The RSI ran up to almost 54. No, excuse me, ran up to almost like 60, pulled back to about 54. Now it's probably going to drop down into the 30s tomorrow. I'm sure a lot of investors are going to hit the sell button. MACD going to curl and potentially cross to the downside, adding to the sell-off even more. So you might see like 18, 17, 15 now over the next couple of weeks off of this bad news. And then it could maybe bottom out, and people will get it trending again saying, oh, hey, it was up here. Now it's all the way down here, right? So you're going to have a lot of people stepping in, buying those dips, people watching the RSI. As soon as it drops down to whatever, 27, 25, they're going to step in. They're going to buy that dip on the RSI as well. So that's why, in my opinion, I would tank it. But again, I know it's a popular stock that a lot of you love. So that's why we may see a drop down here into like the high teens. And then you're going to see a potential flattening and a little bit of a rebound taking place, in my opinion. But again, we don't know what news is going to come out. And even if the stock does continue to slip for the next couple of days, chances are if they announce, again, they're issuing more shares, it's probably going to drop again. So that's why I'm saying if you look at some of these moving averages and like the bottom Bollinger Band levels, you can see like that 17, 18 price range. which may be showing us, kind of foreshadowing where the stock may go. 50-day on the weekly, 1766. Bottom Bollinger Band, 1714. So we have to see again, because 20 is kind of like a psychological level as well. So we have to see if we, drop down to like between 20 and 21 and we just kind of stay flat, or if we come down, hang out for a day or two, and then we decide to break it and we drop to 18, 17, you know what I'm saying? So we'll see, but it was holding the mid Bollinger Band for quite some time now. Obviously, it's going to break down here. MACD was flattening out. If we had a good report, we obviously would have crossed to the upside. That kind of would have added to the momentum. You might have seen even into the 30s, but of course, now that's going to drop down. RSI, same, middle of the road here, 56. So now we have some room to drop down and sell off. So that's why we may see like 1817, I think, in my opinion. It was a big miss. And I know people are saying, well, it could still squeeze, the actual play itself is still on the table. Understandable. But we know from quarter to quarter, these stocks swing up and down based on these numbers. And unfortunately, again, I'm not trying to beat up the company, but technically those numbers were pretty dismal. And that's not what a lot of people wanted to see. And we have a pivot point here, as we see, about 19. This is on the weekly. Pivot point at 19, which is just below our 200-day moving average, which is why I'm saying, again, we may bring it down to that 20 psychological level. It could dance around, but then it really should break and drop below that 19, maybe retest this 200-day. Then it could try to bounce back up and try to get back up to like this pivot point here, 2027. But we will see. Looks like it tried to run up to about 25 and rejected. And now we have, again, rough earnings report. So we may drop this down to 18.5, potentially low 17s, in my opinion. But yeah, overall, again, buying Pokemon cards to have them in the store, again, they could bring, some new faces in, whatever. But that's like putting a Band-Aid on a broken knee, kind of. You know what I'm saying? Like, you really got to go in there and fix the problem. And I think that this whole shift, like we said, digital consoles, you can buy the games online, you don't need the physical copies. A lot of the stuff they sell in their locations might be a couple of bucks cheaper online, right? And we spoke about how inflation's kind of eating away at people's savings, and they're doing a lot more belt tightening now. So that, something as simple as that, I can get the controller here for, $5, $8, $10 cheaper than at GameStop. Okay, so I'll just get it here. You know what I mean? In my opinion, I think there's a lot of that going on as well. And as we said, if people don't have to go to GameStop, then it seems like they're not going to. But right now, stock showing a little bit of life, back up here to about 21.5 above the 20-day moving average. We have a fib here, 21.46, that the stock technically just got up above here, 21.5 now, down 8.33%. But in my opinion, unless they announce something awesome that they're going to try to now implement into their business, or they just bought this other company now, so they're expecting growth in revenue like I laid out, they need an announcement like that for this stock to start actually growing and get real again. Because right now it's just a meme stock. It's teetering up and down with tweets. People are looking at cash on hand, but people are also looking at drops in revenue, 20, 50%. So I know people are trying to speculate. It could go either way, but technically, this stock is probably going down unless we get a big news announcement. But that's pretty much it. So I'm going to end it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky. I know they're volatile, and I know they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for your time. Have a good day.